Investor Brand Network, IBN, a multifaceted communications organization engaged in connecting public companies to the investment community, is pleased to announce the launch of the Stock2Me podcast as part of its sustained audio communications effort to provide specialized content distribution via widespread syndication channels. The following Stock2Me podcast is an Investor Brand Network audio production and may feature a client partner of IBN. Investor Brand Network may have been compensated for the production of this podcast. Please be sure to read our entire disclaimer for full disclosure. Thank you, and here today is your host of the Stock2Me podcast.
Hey everybody, welcome back to the Stock2Me podcast. Thanks so much for taking time out of your busy schedule to join us. We've got a great show for you planned today. We've got on the show Scott Shellady. Now, if you don't know Scott, he is a financial markets commentator. He can be seen on Fox Business, Bloomberg, CNN, TD Ameritrade, but I'm going to let Scott tell you more about himself as we welcome him to the Stock2Me podcast. Scott, how are you doing today?
I'm great, and thanks for having me on.
Absolutely, Scott. If you would, for the listeners who don't know you, maybe they've been living under a rock for the past 10 years, tell us a little bit about your background.
Well, I've been in the financial business, commodities, equities, and fixed income for about 34 years. And over the last probably 10 or 15 years, because I wear a black and white Holstein cow jacket, which my father actually started wearing when he retired, I started to wear it. I garnered a lot of attention, and people wanted to talk to the big guy in the cow jacket. And slowly but surely, I became an accidental commentator. I didn't mean for it to happen, but about the time I started wearing the jacket, we started to see a lot of flows into the market, especially into fixed income bonds and interest rate products, as well as the commodities section. And being at the Chicago Board of Trade and trading on the exchange in the pits, a lot of people could see the jacket from the visitors gallery and the likes. And one thing led to another, and all of a sudden you find yourself on CNBC and Fox. So again, 34 years in the business, half of that in London. I've got a British passport. It used to be a European one, but we backed out of that last year. But I feel blessed. It's been a long and fun ride, and long may it last.
Brilliant. I love it. So the jacket is like your magic cape in some regard. You didn't mean to be a commentator, but you're an excellent one at that. You've always got a good take on things, a good perspective, and it's been a year, that's for sure. If we look at our last 12 months here and a little bit further than that with a global pandemic, but there's been other things as well. There's been a lot of outliers in the market. Nobody was talking about Robinhood 2 years ago. Nobody was talking about GameStop, that's for sure. Let's get your outlook on 2021. And what I mean by outlook is we're halfway through the year. What have you seen so far? And maybe give us a take on what you see coming up this summer.
Well, I would, the whole thing has to be, like you said in preface, it has to be taken into consideration with the fact that we're coming out of the pandemic, right? So I argue, and I say this all the time on television, that nobody on this planet has ever seen anybody try to start up a $28 trillion economy from scratch, from cold. And we're in the middle of doing that. And that is throwing a real big wrench into things, and nobody really knows what to say about it. We're not using the right words. A great example is tomorrow you're going to hear the jobs report, and you'll hear a lot of people from the administration talk about jobs created. Well, they didn't create anything if they just open up your business and let you go back to the job they kicked you out of in March. So we're not using the right words. The unintended consequences are going to be with us for 20 years. And how we navigate the next 18 months, I think, is vitally important because of that, because no one's ever seen this happen before, right? Mm-hmm. We flipped the demand switch on, which is an automatic now thing, right? It's like the lights of your gymnasium. When you turn them off at night on Friday, they went off right away. When you turn them back on Saturday morning, they flickered. It took them a while to get started. Mm-hmm. Our economy is flickering. We shut it off just like the gym lights on Friday night. Now it's flickering to get started. The demand is there, but we don't have the goods and services coming off the conveyor belt like we used to when the supply chains were full.
Yeah, that makes a lot of sense, and we've had some serious hiccups. We've talked about with other people on the program what happened in China, how the impact of these processing chips is going not only in cars but in dishwashers. Home builders are having problems finishing out their homes because they can't get the appliances. So let's talk sectors right now. In your opinion, what are some sectors to watch? What are some sectors in the market to avoid?
I think it's better. I'll answer in the negative. The ones that I'm worried about are the ones that are experiencing a lot of these price rises, like home building would be a great one. Because I think we need to go back to school in this country and do a little research on these two big words, event versus trend. Okay? I think reopening the economy is an event. A lot of the guys out there that are a lot smarter than I are viewing it because they're economists and they've done this for the last 45 years. They're viewing this as a trend. The government sure is going to view it as a trend because they want to tax it as a trend, right? And they're going to try to raise your taxes on this trend. But I'm telling you right now, because no one's done this before, be careful about getting confused with inflation versus a restarting, and stay away from long-term investing and things that have a short-term inflation spike. Yes, it's inflationary because it's a lot of dollars going after too few things, but that might be just temporary because we don't have those few things flying off the conveyor belt, like I said earlier. So anything that gets inflated, I mean, think about it. Did we invent a new technology over the pandemic that I was unaware of?
No, we did not.
But it kind of feels like we did.
Mm-hmm.
I mean, I can't believe that this economy, I can't believe that you were going to tell me right now that April of 2020 would have been the best time to buy a house.
Yeah.
I mean, I remember having talks with people going, thank God we're not long real estate. Yeah, I mean, just think about how upside down it all is because of this pandemic and how the behaviors coming out of it are so wonky. And so that's why I get nervous about getting involved in things that look hot now, i.e., maybe even a lot of these metals and a lot of these miners and a lot of these home builders. I mean, things that are traditionally inflationary, which you would see get a bump, I would be careful because I think we need 6 more months of this to find out just how much is inflationary from the money that the government was throwing at the pandemic. And mind you, that money that they threw at the pandemic, it wasn't like it went to GameStop back then or Robinhood. I mean, these people still had to pay rent and eat. Mm-hmm. So it's not like that's inflationary if you're eating and paying your rent. So I do believe, yes, there's a little bit to the fact that they have printed a lot of money and money is easy. I get that. But I think a majority of this is the disconnect between that conveyor belt not being ready and everybody. Like, look, let's just say you were one of the lucky people. You left New York and you bought a house in the country because of the pandemic, right? That's a one-off. We're not going to see a big exodus from New York next year or the year after. Mm-hmm. So that's an event. That's not a trend. But that's the home builders are now the trend that everybody's talking about on television. And so now you got that house. And this happened to my sister. She wants a fridge. Well, that'll be 12 weeks. What?
Yep.
Well, they used to be coming off the conveyor belt, but now 12 weeks is how long it takes them to make one and send it to you. So is that inflationary? I don't think so. So we need more time. And this is where my biggest fear lies. Is I'm actually erring on the side of the Fed. I don't like the Fed. No. And I can't stand myself for seeing their point of view right now clearly. And so that's probably my biggest worry is I understand where they're coming from right now. And normally I don't, and I discount them. But this time I think time is needed because then you'll find out these hot sectors that are benefiting from these inflation trades really are just events and they're not trends.
Well, let's change gears a little bit, but another major event happened, and that was a new regime taking over the White House. Let's talk a little bit about Biden versus Trump economy. Let's talk a little bit about taxes, tax cuts, tax hikes. What do you see from this administration going forward?
Well, it's kind of my bailiwick, and if you watch Fox, you can tell I'm already conservative, so I'll let the cat out of the bag there. But I'm not a tinfoil cap wearing conservative, right? I understand why how Donald Trump, being a megalomaniac and tweeting like he did, can turn people off. But this is my disappointment. I'm 55 years old, been in the business for 34 years, and I'm a little bit more old school and old fashioned when it comes to this. But we have an age group, or maybe a couple of generations of people that think that you need to be friends with your leader, or friends with your parent, or friends with your coach. That's absolutely not the case. Your coach, your parents, and your leaders need to be respected. They don't need to be liked. And what happens when you vote against something rather than for something, you end up in the situation which I think we have today. Or what happens is when you vote because you want to like the person, not because they're a great leader, you end up with the situation where we have today. And I just got done. I write for the Northwest Indiana Times. I contribute to their Sunday editorial section. I just finished my article up on the fact that we mix up those two words a lot, leadership as far as being liked or being respected, and how that's going to affect things. And now we're also in a position where we've got China and Russia lobbing medicine balls at us to see how we're going to react to some of these geopolitical issues that are bubbling up across the globe. I almost feel like we're getting bullied. We had a China summit in Alaska 4 or 5 weeks ago, where they were actually lecturing us on human rights abuses when they've got over 1 million Uyghurs in concentration camps right now. And then now we've had 2 cyber attacks from Russia. They're in Russia, but they're not Russia. Who believes that?
Right.
But Russia came after first of all our fuel, now our food. Mark my words, finance will be there, flights will be there. They're coming after air control. They're coming after banks. They're coming maybe after a settlement system. You're going to find this is not the end, and that's a big problem. So now we're arguing about. I say that's infrastructure, by the way.
Yeah,
but we've got everybody in Washington arguing whether or not babysitting and daycare is infrastructure, while Rome is burning behind their backs, which is frustrating me because I would have had all hands on deck right now, to make sure that our critical infrastructure, whether it's government-owned or quasi-government-owned or even privately owned, is ready to fight against any sort of attack, or at least fight back. But I have a feeling that, we're going to meet the Russians in 2 weeks' time, and it's going to be, hey, Vladimir, you got to tell your bad actors to stop technologically wreaking havoc on our economy. And if you don't tell them that, I'm going to have to ask you to try to tell them it again. I mean, nothing's going to come out of it. So I'm pretty bearish when it comes to commerce, because I think we're in a tough spot with we're being tested technologically against our economy, and then fundamentally I think that we've given a lot of our freedoms away for this perception of safety over COVID, which has also disappointed me a lot. So I think the world is got 20 years of unintended consequences from shutting your economy down from this COVID, and I think that we're going to be worse off for it. I don't think we're going to come out of this better off.
Yeah, great point. Lots of good takes within there, and these do feel like soft jabs. The fuel and different hacks that they could come into. And you're right. I mean, it's not going to feel soft when they take over airlines and we start seeing planes crashing like out of a bad Bruce Willis movie, or maybe a very good Bruce Willis movie. I don't know, depending on which side you're on with that. Let's talk about cryptocurrency then. I mean, it's been mercurial since its outset, but this year feels even more tumultuous. Another good $5 word for how cryptocurrency behaves. Tell me your take on that.
Well, I've read a lot about it and I understand it, which is dangerous. But I've got all my licenses. I have to be very careful about what I put my customers into, right? And I can't, with good conscience, put customers into something that moves more on what Elon Musk says versus what the Chinese do, right? I mean, these cryptocurrencies are moving all over the place on some very odd things versus, when the Chinese say ban some aspects of cryptocurrency, yeah, that takes the market lower, but not as low as it can if Elon Musk says something, or as high as it can go if Elon Musk says something. So it's way too volatile because of how it moves against why it moves. And that also tells me about the investors. It's a different investing class that's much more skittish. Which would lend me to believe it's not professional, right? I've heard all the stories about Goldman Sachs starting up a crypto desk and JP Morgan. Well, they also did that in 2017 and shut them down a short while later. So as you can tell, I think it's too much of a pioneer trade right now. And I would say my definition of a pioneer is a guy with a coonskin cap face down in a puddle of water with an arrow in his back. I want to be the guy stepping over the pioneer, and I don't think we're quite there yet. I think it's got a ways to go because you've got governments that are going to want to have their own digital currencies. How's that going to shake out? How is it going to shake out with the government wanting to track? Look, we just got done talking about cyber attacks. These people aren't asking for ransom in dollars. They want the underbelly of the dark side of investing, which is cryptos right now. Not traceable, no banks involved, covert. So as long as the asset class is still kind of deemed, I don't know, it's shady, it's going to be hard for massive, adaptation. So I still think it's, like I said, we're in the pioneering stages. It's got a ways to go. And, this is like asking me in 1905 when there was 100 car manufacturers, which four would be around in 2020. It's like, who knows? I mean, it's such a wild, wild west right now.
Well, and things aren't adding up. You talk about hacks, you talk about cybersecurity, but cybersecurity stocks are underperforming at this time currently. But it seems like with the news, maybe we see that turnaround. Let's talk about let's go positive for a minute here, Scott. Let's talk about maybe some stock picks that you have for 2021. What are you looking at? What gets you excited?
Well, because of my all my licenses, I have to be careful about doing that over the air because I don't know my customer, if you can understand that. So
I can. That's a fair point.
I have to be. So I have to answer with a broad brush, and I kind of already started to say that. I want to stay away from things that look hot right now because we've got this euphoria trade going on. And to some degree, look how far the stock market came back from our April lows last year, I mean, the euphoria is over. The reopening trade has got to be over, right? So now, what are you going to do with your capital? I mean, somebody that I talked to a lot called me last night and said I might have just, sealed the deal for me never to be on a radio show again. I said, wow, what'd you say? And he said, I really do believe that 10 years is going to go through 1% before it hits 2%. And I said, I don't think that's crazy. Look around the world at the other currencies and what their 10, 5, and even 20 or 30-year bonds are yielding. No one could call you crazy for that, but in this country, we're on this euphoric. They're trying to get the stockholders used to the fact that we might have a 2.25, 2.5% 10-year, and to try to digest that so the market, when it does finally get up there, doesn't tail off and everybody loses all their equity. But I'm with this guy that said that because I think that if Biden sticks to his plan. And we have, I don't know if you saw the $6 trillion budget that came out Friday before the long weekend, but there's no growth in it. There really isn't any growth for what they want to do, and it's the most taxes they've thrown at the economy in the history of the country. So you're going to tax us, whatever you tax, you get less of. We won't be as prosperous. I'm worried. That's what I'm worried about. And so I think that's what the Fed's worried about. Look, yes, things are hopping right now, right? We can't get people to fill jobs. The government, again, is our biggest competition for labor. But at the end of my day, I'm worried that once we sort this out and those conveyor belts are full and we have just-in-time inventory and everything's kind of humming and all the ships, the trains, the planes, and the trucks are in the right spots, because they still aren't, by the way, then we'll feel comfortable. We'll be able to assess where the economy is. But that's just about the time that Biden wants to throw these huge taxes at us. And I think that's what the Fed's worried about. What does this world look like? What does the stock market look like on the other side of this demand curve? Because basically what we're looking at is a bowling ball going through a boa constrictor. And we're on the upside of that bowling ball going through. But when we come down the other side of that bowling ball and the government wants to throw historic tax rises at you, at the same time your GDP goes back to 2%, which is what they're actually forecasting, what does the world look? What does the equity market look like then? What does the world look like in that scenario? And that's why I'm erring on the side of the Fed. I'm very cautious because I think that this party could end because nobody's planning on it ending. Mm-hmm. That's why it's going to be great. We're reopening. I just can't get on board. So that's why I want to stay away from stocks, or at least in sectors that are so buoyant right now. It just feels like you can't go wrong.
Yeah, another great take. We're speaking once again with Scott Shellady. He is he's more than a financial markets commentator. He is immersed in these markets, but he is the man in the cow jacket. His father chose to wear that jacket. Scott has followed in his footsteps, both on the trading floor and with the jacket. Scott, I know you're a very busy person, so I want to say thank you so much for making some time for us today. Absolute pleasure speaking with you for the first time. I hope we get a chance to do this again in the near future with you, Scott. Thanks so much for your time today.
No problem. Thank you.
All right, for Scott Shellady, this is Stuart Smith saying thanks for tuning into the Stock2Me podcast.
The following Stock2Me podcast was an Investor Brand Network audio production. IBN is a financial news and publishing company delivering a new generation of corporate communication solutions, including news aggregation and syndication, social communication, and enhanced news release services. Investor Brand Network may receive payments for corporate communications relations, as well as various press releases and social media solutions provided to its clients. IBN holds no shares of any company named on the IBN sites, brands, and/or podcasts. To be clear, all officers, directors, and independent contractors of Investor Brand Network hold zero positions in and do not trade or intend to trade the securities for their own accounts. This interview is not an offer or recommendation to buy or sell securities. Information in this broadcast is presented solely for informative purposes and is not intended to be or should it be construed as investment advice. As in all investments, investment in the featured company carries an investment risk. Listeners should review the company thoroughly with the registered investment advisor or registered stockbroker. This podcast audio interview by Investor Brand Network is not intended to be a complete study of the featured company or other companies mentioned. Information used and statements of fact have been obtained from featured company and other sources, but not verified nor guaranteed by Investor Brand Network as to completeness and accuracy. Such information is subject to change without notice. Please see our full disclaimers and disclosures at investorbrandnetwork.com.